The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Basil Chapman, Tiger Technicians Hour, Technical Friday in the Chapman Wave methodology. We're going to get right to it. And the Dow's up 44, 26,484. The S&P's at 2918, up a little less. It's up it's up 3. Yep, up 3. Comp index is up 10 at 8,052. This is interesting. The VIX is actually up a little bit. The VIX volatility index up 15 cents. And I did have a signal to say that there should be a pullback in the Dow to negative on Monday early morning. We don't know if that it failed the other day to say that the market should be pulling back. In fact, it was a really strong session. One of the few times this year that it's failed. Maybe it's failed twice so far this year. So we'll see if that works out. Now, what's going to be really interesting is within the context of the Dow itself, you've got some real mixed goings on. You've got the financials pulling back, that the banks, that is, not necessarily the card companies, but the banks themselves are pulling back. And you've got, on the upside, you've got Boeing moving high. So this is really, that's why I'm considering the Dow 30 to be just a perfect amalgamation. Maybe one extra too many, maybe American Express shouldn't be in there. Maybe one too many, well, maybe either MasterCard or Visa, one of them should go. But otherwise, it's really an amazing mix. You've got pharmaceuticals, you've got routers, you've got airline. You got multinational oils. So, okay, as I'm looking at the Dow right now, I've got a down arrow to say that there's a sell signal. Until there's a close below the 14-period exponential moving average of 26,348, I have to consider that it's sell signal, not a sell mode. Remember, this is just a designation. It just says, at this particular time, this is what you've got. It doesn't say, oh my God, sell mode, sell signal means it's going to go to a sell mode. Sell mode says, oh, we're going to power lower. It just says that's where you are, and you go one step at a time. For instance, the day is young, but the MACD has just crossed negative. That's the first time it's done that since it had that those big 3 spikes up in 17th, 18th or so of August. Oops, was that? No, September. Yeah, until those particular days, it was a negative, and then it went positive. So now it's a little negative again, but the day's young. It's a daily chart. Looking at the stochastics, down at 68%. I feel comfortable to say that I think that the upside is kind of limited here, and the downside should go in steps at 26,300, and then if that is taken out, 26,220s, 26,100, just step by step. And each time there could be a bounce before it goes to a low low. That's what I'm looking at. And I'm also basing it on the peak F that I'm looking at. Could be an alternative wave count, but I'm calling it F for now in the weekly chart. The MACD is good, stochastic's good. So it's the characteristic of this candle going into next week's candle that'll tell me whether that really is an F. Because if there is a pullback and you take out the low of this, not this week, the week before, of 26,030 at any point in the next 2 weeks, that would suggest very strongly that it's more likely an F, and you're going to restart with a brand new buy mode. But MACD's good, stochastic's good, so let's just do one thing at a time. So we've got a weekly close today, Friday at 4. You've got a monthly close today, Friday at 4, and you've got a quarterly close. So that's why we've seen some buying here with fund managers coming in. It's how long this lasts, and that's going to be very interesting and very important. So 26,616 was the high of January, pulls back to 23,344, breaks to a new all-time high, and we'll see if today closes above 26,616, or if it closes below. And if next week is another lower high, that's going to be very important. If next week is a new all-time high. That's amazing action, fabulous action. But at this point, we'll have to see. Go to the S&P. SPX, there we go. S&P is up 2.84, up 0.10. Dow's up 0.18. The QQQ is up 0.03. Yeah, 0.04. And you've got the S&P right now up 3 at 2917.03. I've got a little question mark here. I felt sure that I wanted to put a down arrow, and I'm going to wait until the end of the day. It did close sharply below the 9-period moving average, hit the 14-period moving average, and then bounced up and closed just above the 9 yesterday, and today's a little bit higher. We'll just give it another day. Why? Because that weekly chart, the look of this weekly chart says it should try for one more. It could try for one more high above the 29. I thought I wrote it in 29.40.91. I'm going to do that right now because I keep forgetting. 29.40.41, and I think that was the 21st. I'm going to put the 21st and change it if I'm wrong. Right there. Okay, so we've got, yep, 21st, and I'm going to make that, at least for now, I'm keeping it in a dark color. I'm not going to red, just keeping it in a dark color. MACD is quite weak, very weak. Stochastic's very, very weak at 62%. I'm pretty sure that at any point, if there's a close below the low of the 2903.20, let's call it 23, 2903, if there's a close below 2903 in the next couple of days, I think we've set in motion a sideways to down trading band. Just keep testing lower lows and lower highs probably, but we'll see what happens. But in this case, there was a couple of very strong closes well above the 2872 January 26 high, and that really is important. The weekly and the monthly is in leg E, looks pretty strong to me. All right, QQQ, 1, 2, 3. This is the Invesco QQQ Trust Series. This is the NDX 100, having an inside day today, lower high than yesterday, higher low than yesterday. Leg D probably making a peak D, but the MACD cross positive. Stochastic's only at 76%, but rallying. That's all good. And it's got a hop, skip, and a jump to go to an all-time high, and yet it hasn't done that. And as I said in the den, mentioned in the den, yes, this is a pretty quick peak A to peak B, to the third highest peak, peak C, and the fourth highest peak, if it's today, peak D. Watching this real closely because it does say that very often when you get a pretty quick A, B, C, D, there's a pullback. Remember, I've always said it doesn't tell you there's a major sell-off or anything. It just says get ready for another pullback. So that's the way I'm looking at the daily. But the weekly chart is held very nicely, even though the stochastic is at 79%, under 80%. The MACD is just kind of hovering above the slow-moving average, the red line, and the 9-period differential, the green line, faster-moving average, is just above it. As long as it's above it, that's good. And the weekly chart says, hey, maybe testing once more that Chapman Wave inside track repellent zone. We'll be back in a second. We'll look at the IWM, which also is rallying today. It was actually leading the pack to the upside, up 0.40%, 168.71, of making a leg F to the downside, up right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, we're back. Quick question that I had there, just a statement, VBIO, which is, what is that? That's Vitality Biopharma, running nicely up. It's at 2.17. Up 0.12, very good. So let's go back to the IWM as I was going to the break. IWM leading the pack, up 0.37. Made a leg F, not a trough F, as the MACD pulled back sharply in the daily, the weekly, the stochastics now at 16%, very low. And the price in the weekly chart, the technicals have deteriorated a lot. The price is actually held, daily doesn't look too good. The weekly says, hey, it just does this very often. Comes back to test the 14-period exponential moving average, and that's where the big test is. This is a G or a C in the weekly. I think it's going to be a G based on the technicals, and the monthly chart is still a lower low than last month, but technicals are still holding very well. Parameters to watch, I'd say to close into the under 167 would be very into the 167s, but preferably looking at 167 for some confirmation would say very negative action. Could even bounce to the 9-period moving average and 14 in the 169.30, 169.60s. But this is not such great action in the IWM. Just I had a quick question. I'll get to it right now. Yeah, the E-mini trading at 29.22. It's up 2. Made a peak D in the daily chart in the last move to the upside around about just before about 11:10 or so. Made the all-time high of, I don't have that. It was, I think, 29.25.50 or something. 29.25.50, yep. And now it's pulled back. Well, there's just a minor pullback in the 2-minute chart. I keep saying the weekly, but the 5-minute chart looks a little more serious as the MACD is really turned down sharply and the stochastic is very weak. And it's the 10-minute that is holding quite nicely. So make it clear, a close, it's a 29.21.75. A close, two bars out of 3. Underneath 29.19.50 will say, okay, we've just seen the high of the day, probably pull back into pretty much the close. That's kind of the way I'm looking at it right now. And any bounce back into the 29.24s says, forget about it. I'm holding steady. I'm not going to break down. There's still buying coming in. Just keep it as simple as you can. Let's go back here. Now, I said that gold was up. It was down earlier on. Then it suddenly it made a lower low. It actually went to 1184.3 right there this morning. Now it's trading 1196. It's got about the same parameter borders in price as yesterday, which was a really sharp red candle to the downside. I would be very impressed if in the next couple, for whatever reason, if gold suddenly starts to trade based on this weekly chart, repelled again at this pink 9-period moving average, if it's able to trade, it's at 1199, so let's call it 1200. If it's able to trade into the 1208 on Sunday night, either later today or Sunday night into Monday, 1208, 1212 area, that would say to me, you know what? Now you can start to say a base is trying to be formed in 1180 to 1170 area, successful so far, but if it gives back a chunk of the gain, and that means we need to look at silver. You remember silver yesterday was weak, not as weak in the chart formation as gold. Today it is spiring. It's up 43 cents. This is a 3% move to the upside. This must be one of the biggest up moves in silver for quite a while. I like this action, and I'm not sure what it would do at a leg D to make this a peak D of significance to pull back lower than today's low, and today's low was at 14.255, trading at 14.720. If it's just starting to build a base and it has these spikes to the upside and starts to make higher lows and higher highs, that would be really important. That means that we need to look at the euro, which must have also had a turnaround. The euro was down sharply. Yep, it's had a very sharp turnaround. It was down at 1.156. It's now at 1.62, still down 0.002, but it is a better pattern, but it is a peak D in the daily, and the technicals are starting to weaken. So I'm going to be watching this because any close below 1.53, is that 1.5? Any close below 1.55, I would consider to be very negative action, and any push in the next week, give it a full week, if it's able to even trade towards that 1.176 level of the 200-period moving average, that's going to be very impressive. Why will it be very impressive? Because look, we were looking for a leg D, the missing leg D in the yen, the USD JPY. Well, lo and behold, today it spikes to 113.663. It's in leg E in the daily chart. It's in leg D, finally, in the weekly chart, and leg C in the monthly, breaking that long-term downtrend line. Remember, I love to look at these lines. I'm only impressed when it takes out the line, goes a little higher, and then comes back and tests that line and treats it as now, instead of a barrier, a trampoline support rocket ship area. So every time he gets there, boom, it goes higher. This is going to be very important because if the yen goes to 114, that's very good action. If it slides and goes back to 112.8, 113 to 112.8, says, oops, could be making a little short-term top here. Now we can go to the dollar. The dollar's down from its high today. The high was all the way at 95.37, trading at 95 right now. Very good action from the 93.81 low. This is going to be really important. See, in this particular pattern that I talk about, the Chapman wave stalk leg formation, it has a long leg up. It's a series of legs, but it's like one big move to the upside, and then it stalls, and then it makes not a rectangle. It has to look, visually, it has to look like an oval. Well, it made that oval pattern, right, I should put this a little bit closer right here so you can see it nicely, makes the oval pattern, and then breaks out, that's the body, and then breaks above the body high, which is 95.53 twice, and then it breaks a little above, it goes to an E, pulls back, and then shoots away to the F, leg F in the Chapman wave methodology, right at about 97, pulls back, holds the body, 93.71 was the body low, and that's when I always say you got to be careful, because in this particular formation, the whole concept takes you through these different stages, then it gets the beak, so it goes leg, body, neck, beak. Beak is the head, but in this case it's a beak because it's a long move down. And if that beak breaks, it closes below the left side body, the oval, yellow oval low of 93.71 in this case, That's very negative and says it'll go to the next level of support. That would be 93.18 in the 200-period moving average. The MACD is negative but flattening out. Stochastic's way down 42%. Not great. But the pattern says when you reach a certain point, there should be a sharp move to the upside, and then you're on your own. You have to have completely different techniques. Well, there's a technique that I'm looking at. We went to a trough D in the daily. MACD cross positive. Stochastic is quite good at 39%, and then you get your spiral to the upside nicely above these moving averages. What happens now? Well, now you've got to say, "Ooh, wait a minute, are we going to make a head and shoulders, an inverse head and shoulders with the left side 95.3s, 95s as the left side shoulder? The head is right there, going to 96, 99, 98, and then pulls back. Now we're going to make that right shoulder. We'll talk about that when we get back. Basil Chapman,
no matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back. So there are a couple of questions coming in, but I just wanted to finish this up. You see, in my automated resistance to support levels, look, the green here on the left in this particular chart, that's the daily, has just a ton of green resistance levels, and they were working really well. Then it has a ton of support levels right down to 1186, and the low that was made today was 1184. So that's worked out nicely, and there's a green bar, and it's got 1197.44 as resistance on the 10-minute chart. What is the 120 say 120 says a lot of support in the 1185-83 area. The 1189 starts resistance. All right, and if you look at the monthly chart, there are mostly support levels from the 1192 level, which has already been broken, but then it drops sharply down to 1134, 1094, and it goes quite a bit lower. But look, 1256 is resistance in the monthly, and then all the way 1397 goes up. So I'm looking at this and I'm saying, okay, this morning early, there was a moment where gold was up about 1.5 points, and the dollar was screaming high. So this is really unusual. Now we see that, yep, they do have that correlation, that inverse correlation, and you saw the dollar pull back, and gold is up 9. Nice green candle. It doesn't matter what the reason is. It's just a good green candle. Not good enough yet, because it really needs to break all these resistance points. So that's why I'm looking at those parameters. And if you look at silver, silver has gone right to the right through the 1445 resistance, 1475 resistance is in the 10-minute chart, and there's nothing until even 1409 has been taken out on the weekly, and now 1468 area is in the 120-minute chart, and we're slightly above that. But if you look at the monthly chart, you'll see that there's a lot of support, but there are also a couple of resistance levels coming up. So as I'm looking at this, I'm saying this is going to be a moment that's very important for gold and silver, because if this turns out to be a breakout, what happens to the dollar is going to be very, remember I just said that the technique says in the Chapman wave stalk formation, when you get the beak, when the beak is complete to a certain point, in this case trough D in the daily, it has a really good rally, and then you're on your own. Now we're going to see, does the dollar, we're still long the dollar from 90, we're going to look at the dollar to see how does it act and react, because silver before, back a month or so ago, you remember silver had that big move up, and gold couldn't get out of its own way, and then boom, both silver and gold came down. This time, silver really is leading gold to the upside. Very important that we have some leadership and consistency. So if this changes the parameter that silver now is a leader for gold, we want to see it. We want to see it in the gold stocks, etc. Now, going back to this is what I want to look at, the TLT. This is going to be a very important moment for the TLT. Why? Because the TLT, which is the Lehman 20-year T-bond fund, is trading down. It's actually unchanged right now at 117.58. What's important about this, it had a real nice turn to the upside. This is leg B. The weekly chart helped. Oh, let me go to my chart here. I'll show you something that I showed subscribers this morning. The TLT, look at this. It made a slightly higher low, 116.19 on the 19th of September. And look what happened. I'll go to the weekly in a moment. It had an exact left side, right side price. No, exact left side, right side time match, but the price went from 118.07, the low back like the second day of August, before the rally, to 122.33 peak E in the Chapman wave buy mode completion, and then it comes down to exactly the same number of bars to the downside before it turns up on the 19th at 116.19. Whoa, 116.19. What does that mean? That means that you've had the U-shaped pattern create an arch formation, second arch formation. So you've had your first arch, second arch, U-shaped pattern. There's a possibility, and we won't know until we start to see the general markets pull back significantly, and that hasn't happened yet. We won't know if there's going to be a large second cup formation, because 116.54 was the low the week of 23rd of February. 116.09 was the low, that's a lower low, the week of the 18th of May. Then a higher low, inverse head and shoulders, 116.19 wasn't? Yep, 19 last week, the week of the 21st. And now there's an attempt at a rally, and the stochastic's just trying to turn up. It's not good. It's at 20%, and the MACD has turned down. So a lot of work needs to be done. And boy, a lot of work needs to be done, because that monthly chart says that regardless of any rally, there's a really good chance we're going to go into the 115s at some point. So this is what I'm looking at. On the short term, this is nice. It's not great action. It's just nice action, as I said to subscribers. I think there's a chance that the TLT could rally further. My target was the 117s, 80s, which it actually hit. That's the 14-period moving average. And then the next target will have to be somewhere around right in there, the gap up of the 18th, 118.07, and just go step by step. We don't know yet, because it came off the low. It went to a high, came off the low today in that bar. MACD hasn't turned up, and if the MACD turns up because it's gone to 118.23, somewhere around there, that is going to be a very important moment, because you can see each turn of the moving averages has created a very nice trend. We don't have a trend yet. We have just the start of a potential trend. So, and will that mean that equities are becoming volatile enough for money to come into bonds? It's just real simple. If it does that, bonds can rally. I think the bigger picture says higher yields to come, but we'll get to that later. TLT. Oh, look at this, Fred. Congratulations. Great call. Huge move. $1.22 at up 73.34. That means it's taken out the left side of the continuous code. 73.54. Today's high is 73.49. It's got 7 cents to go to make a new leg to the upside. I said F. That is not an F. That should be a gray B, because it's underneath the previous high. And that can't be a leg E to the upside. I mistook that for a new breakout. It wasn't. So we're just waiting to see. And crude oil looks really strong here technically in the daily. And the weekly cross positive, that is a very good sign. But we've got until 4 o'clock today. That could change. But so far, so good. I think I've covered everything that I wanted to cover in this particular. HGX, this is the Philadelphia Housing Sector Index, down again and again. Peak F in the monthly chart. Oh, this is just not good. Let's see, wood, WOOD, this is the iShares timber and forestry, lousy action. What a mixed market. It's just being kept up by a couple of stocks. Boeing, I get asked about all the time. Boeing is up 5 points. Yeah, that's that leg D. Yesterday I said we should get the leg D. 374.48 was the all-time high. It's under that. This is going to be a key couple of days coming up for Boeing. Leg D, monthly chart, hasn't yet gone higher than that F. Oh, very interesting. So I'll be right back, and then we'll go to the questions.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So this is what I needed to look at. I had a great question in the den. It's Basil SPX, that's the S&P 500 index. Does that appear vulnerable to decline or just a pause prior to higher highs? Thanks, Z. So I'm going to get to that, but I also had a couple of questions on it. I just wanted to go to the coffee, CC, and this is a continuous contract, down 47, gone to a lower low in the weekly chart, and the monthly chart has that Eiffel Tower, straight up, straight down, looks like an uppercase A, and this is not good at all. KC is the coffee. Coffee has a real nice spike today. This is the kind of action I was saying I wanted to see in gold for a long time, but it has. This is a leg A, a pullback, and then a zip right through that and breaking all the left side resistances and near-term resistances. I like this, and it's a good candle. That says to me, now you can start to consider coffee as beginning the attempt, because it has to go from the daily to the weekly and the monthly, and weekly and monthly are terrible technically. So you have to go from the daily. The technicals suggest that at 103.05, 99.50s is, that has to be now 95.70s to 101.20. That has to be really a strong cushion. If it comes back and takes that out, it's a real problem for coffee. But this is the start of a potential move higher. Platinum, I asked platinum right here. Platinum is trading, I can't even guess, up 580. It made that peak D. I was looking at the, I don't know if I mentioned it on air. I know that I had it ready to go, but if I didn't, it made that peak D. This is not yet a sell mode. It is, I can call it a sell signal, but the MACD is still strong. Stochastic is weak, and the price has gone decisively below the 14-period moving average. You've got to watch this. Maybe it's going to go with the metals. I don't know. But the weekly chart is not a bad, at 820, just make it real simple. The close below 808, very poor. The close above 833, nice action. Let me just see. Yes. So there was one other that I want you to do. I'll think of that in a moment. Was it a sugar? I don't know if it was sugar. SB. Oh, sugar is having a nice doji candle from yesterday. A nice move to the upside. This is that uppercase A that is so far successful, like a dreaded H. This is just the start of something. The technical suggests it's just the first green bar you've seen in a while. If at 11:13 you see sugar up in the 1140 area by Tuesday, then you've got yourself a little bit of a turnaround in sugar finally. And I remember now what the other one was. It was corn. Corn contract is having a sharp pullback here, but it's had a nice strong leg A. This is, you see, the technicals in the weekly chart are much better than the others because it's had time to build a base. but until corner 359 can actually start to trade in 369 or higher. This looks to me like you've got to be a little careful. Chop, chop, chop. You never know what's going to happen. Okay, now we can get to the XBD, a question about the XBD. And I'm going to get to the S&P in a moment. XBD, this is a green candle, but a down day, down 46. I constantly say this, and I have to say to myself, to remind myself all the time, I've been just dying to get into some of these brokers. No, I've got to have patience. Leg D in the weekly chart, monthly chart of peak D are still going down. Gotta wait. There's nothing there yet. But we did a couple of other things. Oh, that's right. I had a quick. Can we have a look at the E-mini? Yeah, the E-mini. Oh, this is the candle we were looking for. Finally down 50 cents at 29.19. This is what we were looking at. So it was a peak D. I can now put a down arrow in the 10-minute chart. 10 minutes. There we are. Down arrow. Confirmation. Confirmation already had a peak G in the 5-minute, and we already had that sell signal at that unusual peak F top, peak D top with an instant restart right there, and that was the high of 29.2550, trading it now at 29.18, just took out the 200-period moving average. And folks, I just have to repeat this over and over. I have to repeat it to myself because it's so difficult to do. Within the Chapman Wave methodology, let me just go through this. For my subscribers, the steel stocks that we've had, the steel ETF and the stock that we've got have acted really well. I said to them, be a little careful. Let's just raise the stop on one of the positions. We've taken some real nice gains in the other. And I said, even that one, we're going to raise the stop a little bit. We got in at $4.36, and today it hit $4.90 something. That's fantastic action in a market like this. But it's all very selective. And at a certain point, steel won't be in play. I mean, somebody's going to say something. But at this particular point, I felt that the pullback was enough to say to me, this is in play because I think that they're going to start to see some benefits. I want the bottom line. This is a longer-term outlook. I think steel needs the bottom line to come in really strong, and it's going to take at least 6 months before we know that. So this was an attempt to get in, to get a feel for it. I'm not sure if these positions are going to be the ones we can stay in. We'll see if they are fabulous, if they are, but we're going to see. And yes, we still have United Technologies had a nice day today. It's still up. We're still in the IBB, which is the biotechs, in at 110s. It's trading, I don't know where, 121 something. Those are fine. But it's what happens now. And I'm going to quickly go to Syntas because remember, we looked at it yesterday. I said for me, it's a bellwether. I cannot rule it out. It's always been a bellwether. And it plunges from 217.34, the 7th of September, today, the 28th. It's trading, it hit 195.08. It's trading at 197.41. This is telling me that now I can go to the question in the den. What about the S&P? So if you have Syntas, which for me is key, but on the other hand, you have Amazon, which is really the United States economy, because let's face it, people are using Amazon now for almost just everything. Maybe even now it's going to be starting soon for the really big things, maybe even houses, who knows? But they're in everything. And until Amazon really takes it on the chin and breaks under 1850, and it's right now 2004 with the all-time high, still at that, you remember we had that round number we were looking at, 2050.50, the day that it made that all-time high on the 4th of September. It also had a 2013 round number low. Now I can talk about this because Home Depot is included, and Home Depot right now is down, I think, a little bit. Oh, it's now up a penny. It was up more. Now it's starting to pull back. I've got this as a potential top in the daily. I've got it as a sell mode in the daily. Weekly chart has gone to a leg D, a peak D. Today's close and tomorrow's next week's action will tell me whether or not I'm getting sell signals, sell signal in the weekly chart. The MACD is good, stochastic's at 81%. Now I'll tell you what I'm looking at for the S&P. SPX.X down $1.56, and it was up earlier. And this is saying to me, I have to go step by step. We've got to break. We've got to break, but I have the next section coming up. I want to talk about that because this has now become so interrelated. Gold, a dollar, bonds, Dow, S&P, QQQ, IWM, New York Stock Exchange, crude oil. Wow. The potpourri, the domino effect is going to be dramatic. And we've got a dark cloud news cover. I'll be back. We'll talk about it.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. So just for subscribers, because we're going through this, the new iteration of the just the technical side and TFNN for the post, for me, for posting, I might have a little difficulty getting some of the charts out. I'm going to do my best to get what I can. Certainly by Sunday night, I will have gotten quite a lot. Usually I start Saturday morning and I can just post them. It's just a little different now. I have to wait to be able to do that. I'll try to get as much as I can. Now let's just do this. So the S&P, this is the way I'm going to, because as I said, there's a news dark cloud cover that's kind of going to start hovering. I think they're just like one or two little events that are going to be absolutely crazy events. Talking about crazy events, pair of shoes the other day, valued at 21 million. This is the whole period that I'm talking about, this coda period. This is where you see prices that are just so phenomenal. It staggers the concept of pricing of anything. So if and when the S&P starts to take out, it can't just be a little bit of if you're talking about a big move to the downside, it has to be 3 consecutive, very strong, terrible sessions where the S&P basically takes out, it's a 29.14. It really has to take out this whole area from about 28.5 28.80 to 28.76. And until it takes that out decisively, I can only say to you, choppy, choppy, sideways, lower lows, lower highs, probably for a little while as it consolidates. But if it does that at some point, then that weekly chart starts to become much more impressive as an indicator, because if the MACD starts to turn down and actually crosses negative, it's going to take at least 25, no, I'd say probably 50 points before the MACD actually crosses negative, and probably about 37 to 40 points before the stochastic goes from 91% down below 80%. So until that happens, all I can say is you've got to be prepared for anything that can come up in this market. And they're always going to be pop-ups. This is the whole thing. What's weak today could be strong tomorrow. So until we see a decisive close, sharp close in the S&P, I think that there's a choppy market, limited upside, maybe a limited downside, but more downside than upside for now. Stay tuned for Steve. Check out my opening call, our newsletter, and of course, have a wonderful weekend. See you back on Monday.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.